Stocks are down in a mixed day for trading as markets look ahead to Bernanke's testimony tomorrow, and we're joined by Jason Weisberg of Seaport Securities. Jason, do you expect any surprises from Bernanke tomorrow, or is tapering largely priced into equity and bond markets?
I think not only largely priced in, I think it absolutely is priced in. Barring some really large anomaly in his words or in the minutes, I think it'll be the status quo as far as their policy. They've been telegraphing it for at least 12 months. It's fully priced in. What's driving the market today, and certainly these next few weeks, will be earnings.
Okay, we have had some strong results from the financials, a good solid result from Goldman Sachs today. How well placed are the banks for a change in the interest rate backdrop?
I think because the Fed has done such a great job in telegraphing their plans for the future in terms of tapering, that the banks are probably very well positioned. I think they probably look forward to a change in interest rates so that it can allow them a little more flexibility in terms of their profit models. Outside of that, I think that we need the financials, like you had mentioned, Goldman Sachs. We need financials to lead this market to greater highs than we are at right now. And we're seeing that right now. Unfortunately, we had a couple of Dow stocks that reported not so great earnings, and it's reflected in the tape today.
Okay. And what will it take for the market to reach new highs? I mean, the economy is going along at, I don't know how you'd characterize it, kind of chuffing along, not going fantastically, but what will it take to break through to new level?
The continued interest in equities, companies constantly redefining and keeping their financial statements fluid to adapt to the environment. Their adaptability will continue to attract equity investors. Interest rates being at these historic lows forces investors into the equity market because most equities not only yield a dividend, but what they're doing is they're paying you to wait for capital appreciation, which is what most equity investors want. So if the markets go up, plus they pay a dividend, it becomes a very attractive investment for most people. And I think that's what will drive the market up.
Okay, sorry. So the great rotation hasn't quite finished yet?
Oh, no. I think we're just starting. I mean, if you go back to 2007, if you like the market in 2007, prior to the financial crisis, where a lot of companies and a lot of the froth in the market was built on a house of cards, so to speak, today, most companies have shored their financials up. It's a very strong environment. So if you like the market then, those people should come back now because companies are a lot better suited to return on real returns versus, prop returns with smoke and mirrors.
Okay. And finally, we've got Microsoft at its highest level since 2007. Will you be looking for anything specific amongst the major tech companies that report this week?
Well, I think it's an interesting sector. Tech is constantly evolving. It's the one industry where they get to reinvent the wheel, so to speak. And Microsoft has faced a lot of headways because it's viewed as this large company that hasn't been able to be nimble. And now that they're restructuring into different verticals, major verticals, certainly in my view, and I imagine that most people that invest in tech stocks will see this new form of a company being able to be quite nimble, and that's what's attracting investors, and it's reflected in the stock price.
Well, there you have it. That was Jason Weisberg of Seaport Securities, and I'm Jane Searle for The Deal.